A question we get asked all the time is, should I have a holding company? A good place to start to better understand holding companies and whether businesses should use them is to define what a holding company is. A holding company is a company that isn't active. This means that the company doesn't produce any goods or services, but it can hold shares of other companies and investments. This can include investments, your own operating company, shares in public companies, real estate, and so on. When your holding company owns the shares of your operating company, then you have the opportunity to shift the profits from your operating company to your holding company. So, what are the benefits of a holding company? Number one, a holding company can help with asset protection and creditor protection. What this means is that if something goes wrong in the company or with a service that your company has provided, creditors generally cannot go after the assets held by the holding company. They can only access assets held by the operating company. This holds true most of the time. Number two, holding companies help with tax planning. As a business owner, you're able to transfer retained earnings from your operating company to the holding company via tax-free dividends, which can then be reinvested into the market, real estate, or other investment vehicles. Once you have transferred the earnings from your operating company to your holding company, it allows you as the individual shareholder of the holding company to withdraw income or dividends as you need it. With corporate tax rates lower than personal tax rates, it is beneficial to keep the money in the holding company where it can continue to grow and earn money through investments if you do not need it as personal income. Number four, by keeping your investments and real estate inside the holding company, it makes it much easier to sell the operating company and utilize your lifetime capital gains exemption. Lastly, another benefit of a holding company is when it comes to a specific asset of estate planning known as freezing your estate. What this means is that the shareholders' interest in the company is frozen and new shareholders, typically children, come into ownership. At this point, any earnings going forward will go to the new shareholders. Despite all the benefits of owning a holding company, it's important to understand the potential drawbacks before owning a holding company, two of which are operational and additional costs. To recap, a holding company can provide flexibility in the timing of dividends paid to shareholders, protect assets, help with tax planning, tax savings, and estate planning. If you're a business owner and you want to make the most of your corporation to get further ahead, book a call. We'd love to help. Thank you.